This is what you need to cover if you are planning to do this financial reporting in this sitting for August exam. This is what you have to cover. The topic one is for accounting for assets and liabilities, which we have the investment properties. So basically, this is the theory. That is subtopic from number 1 to number 5. They are all the theory. Then we have subtopic 1.6, which is the current and the deferred tax. So this is the one which you have to compute some, it has the computation, that is the income tax IAS 12. You will have to do the computation. And then in topic 2, which is the revenue recognition, the effect in the exchange rates, the borrowing cost. Only is the borrowing cost which you will have to do a bit of calculation. The rest will be the theory and also the construction contract. The construction contract also, they have a calculation. So basically topic 1 and 2 is mostly covering 80% of it is the theory. And then now where the 90% of calculation will start is from the topic 3, which we have the conversion of a partnership, whereby we are changing the partnership into a limited company. We'll be also tackling the professional firm, the books of account for the lawyers, accountants, doctors, and also the engineers. And then the agricultural activities. We will see how they account the revenue from the farming segment, and then they consolidate with the entire company, because in farming maybe you might have one segment doing the farming and the another segment doing other activities. So we'll have to do the revenue from the farming. Then from there we consolidate with the entire revenue. And then we have the pension plans. So the pension plan is also a topic which we'll have to look at in this financial reporting analysis, which it covers the contribution from the members, the contribution from the employees also, which it basically check the net assets and changes in net asset, which that is the topic we are going to see today. And then topic 3.5 of the topic 3 is the cooperative societies. You also need to prepare the books of account of the cooperative societies. So if you find in most scenarios, the online material, they still have the banking sector. It was removed in the previous syllabus, and it was taken back to the advanced level. Also the insurance. The insurance, we don't have the insurance here. Last sitting, we got a lot of queries from the student. Is this insurance still in the syllabus? No, it is in the old syllabus, so it is not there. And then topic 4, we'll also look at the published account, which it is a compulsory. The published account is also a compulsory when it comes to the examination. So it depends now whether the examiner will test for the comprehensive published account or the statement of cash flow. So we have two sittings. That is the last sitting 2025 April and December 2024. The statement of cash flow has been tested twice. So we can't expect another statement of cash flow in the August exam. So most probably, but remember, the examiner also is playing with your mind. That's what I told my students last time, that if you do the predictions, you will say this statement of cash flow was tested last sitting, so it will not be tested this sitting. And what will happen? They will bring the same question, and that's what they did. So remember, as you try to predict the mind of the examiner, it's also playing with your mind. So we don't need also to assume that we will not do the statement of cash flow. We'll have to cover that. That we have discontinued operation and the event after the reporting period. That is basically theory. Then topic 5 is for the group account. Topic 5 is for the group account. which you will have to see how to account for the subsidiary, how to account for the parent, how to account for the associate, and also how to account for the joint venture, and also how to account for the joint venture. That's what we will see in the topic 6. And the topic 5 is the ratios analysis. Also, this topic was tested last sitting, the ratios analysis in two sittings, 2024 and 2025. So it's also an important topic, that is analyzing financial statement, analyzing financial statement. So which sitting, because we are in a group, we are in a mixed group. So Akolo, are you doing intermediate level, or you are planning to do it? Yes?
I'm planning to do it. Good evening.
So maybe you can, I can't hear you. Let me check some mic. Just a minute. So maybe you can't now talk. I think my audio is okay now. So you are doing this semester?
No, I'm planning to do it.
Okay, good. So that it is also important to start earlier because of the time limit we have. So we will look at a bit of a theory of this pension, and that we look at the illustrations. So let me share the theory part. So the topic is pension schemes, or another name is a pension plan. So if you get to the pension scheme or pension plan, then it's means the same. So what does this pension scheme mean? So the definition refers to the what? Preparation, presentation, and the disclosure of financial statement for the pension plans, So these reports provide the stakeholders. So remember, stakeholders is an umbrella name, which it included the trustees, regulators, maybe the regulators of the pension plans. We have the employees and members. So all those parties, either contributors and the one who manage that pension scheme, we call it the stakeholders. So every time or in any financial year, they have to provide us the financial reports so that we check the financial health, performance, and sustainability of this scheme. Then we have two types of scheme. We have a defined benefit scheme, which members receive a predetermined pension based on a salary and year of service. So it depends. If you go to these insurance companies, try to register this pension scheme, they will give you a lot of types of this scheme. So this one is based on the defined rate, based on your salary and the year you serve that company. And then it's also financial reporting focus on liability and actuarial assumptions, yes. But that one, the second one is the one for the actuarial assumption. It is being tested in advanced financial reporting. So we are not doing that one in the financial reporting of the intermediate level. And then we have the second type, which is the defined contribution scheme. We call it DC scheme. So members' benefit depend on the contribution and the investment performance. So it depends with the amount you are contributing every month and the investment performance. Remember, if you are contributing to any pension scheme, they have to give you an interest rate, maybe 10%, 5%, or 12% annually, depending on the performance of the investment. Because that money you are contributing, they'll have to invest it in other investments so that After they get the returns or return on the investment, now they distribute to the members. They distribute to the members. We also have the key standards which govern this pension scheme. So we have IAS 16, 19, IAS 9, and IAS 26. All these are the standards which govern this pension scheme. So we have two key statements which you have to prepare in this pension scheme. Number one is a statement of the net asset available for benefits, which it lists the assets. Actually, it lists this one. It lists the contribution and the cash outflow. If you look at basically this pension scheme, it's a kind of we don't say this is actually the expenditure and this is actually the income. So they're just looking at what comes in and what goes out. So it's like we are preparing the cash inflow and the cash outflow of the pension scheme. So that's what you need to do when it comes to the statement of the net assets. And we have the format for that. We have the format which is here for the statement of changes in net assets. So you take the interest income, you add any contribution, and then you subtract the expenses. So these expenses is like pension. If they are paying pension in that period, then it will be part of the expenses in that period. Also, the management fee or administrative fee. We have people who manage that pension, salaries and all that. Then it will fall under the administrative fee and it will be an expense for that period. We have the withdrawal from the scheme. Maybe you have transferred some certain amount in the current scheme to another scheme, which is totally different with your scheme. Then that one also, it will fall like as if it is an expenditure. That's why I told you, you need to understand it is not basically the expenses, but what goes out of this pension scheme. So at the end, if you take the total revenue and less the total expenditure, you will get the net asset. So this is what you will going to take into another statement called, we have another statement called statement of changes in net asset. So this one acts like their balance sheet. So this one is like their balance sheet or the statement of financial position, which we call it the statement of changes in net assets. So that one basically comprised of non-current assets, current asset, equity, and liabilities. That's why we call it the statement of changes in net assets. So we have a lot of theory there, which it is a self-explanatory. So maybe we can have a look at the last sitting illustration. So the last sitting illustration. So the question was question 4C. So the examiner was asking that Elite Limited operate a pension scheme for its employees by the name Smart Retirement Benefit Scheme. The following trial balance was extracted from the books of the scheme as at that 1st December 2024. So we have the normal contribution by the employer and employee. Remember, most of the cases of the contribution, it's like even the NSSF. NSSF is the pension scheme. We have tier 1 and tier 2. Both employer and employee, they contribute the same amount. But in this case, it is a bit slightly different. We also have the transfer in from the other scheme, individual transfer out of to the other schemes, investment income. We have PPE, government securities, members, voluntary contribution, pension, equity investment, and paid benefits, accumulated fund as of that 1st January 2024. We have accrued expense, admin expense, cash and demand deposits, changes in market value, lump sum retirement benefit, contribution due in 30 days. So the examiner wanted you to prepare statement of changes in net asset for the smart retirement benefit scheme for the year ended 31st December 2024. And number 2 is a smart retirement benefit scheme of the statement of net asset as of that 1st December 2024. So we can start with this one, the statement of changes in net assets. So I will use it. I will use Excel to do that. Let me open a new workbook in Excel for today. So we will start with the incomes, or basically the inflows, which whatever it is in the credit side, we will have to see that whether it is an inflow or a liability. So we have the employer contribution. That is it is an inflow in this case. So which we will put that amount here, and that we'll also have the employees 18 to 40. Also have the employees 18 to 40. And then I've seen the investment income. We also have transfer in from other scheme. It is also the inflow in this case, transfer in from other scheme. That's why even it is in the credit. And then we'll have the investment income. Investment income we put here also. Let's see whether we have exhausted whatever it is in the credit. We have the members voluntary contribution, which we will put that. Members voluntary contribution. So I think if you check this one, this is unpaid benefit. This is accrued liability or expenses. So we have exhausted the incomes or inflows in this case. So you will get the total, which give us that. And then we will say less expenditure, less expenses. So expenses, we have said, if they paid any benefit or the pensions, so we can start up here, individual transfer out to the other scheme. So they are, individual are taking the contribution to other scheme. So that is the cash outflow, which we will subtract here. We'll put it as part of the expenditure. And then we go to the pension. So they paid pensions during the year. So will also part of the expenditure. And then what else? We have unpaid. We have administrative expenses. Which is this. Administrative expenses. We have the lump sum retirement benefits. So they are people who are being paid the lump sum of the retirement benefits. So it's also an expenditure to them. We also have a contribution due in 30 days. So maybe they'll have to pay this contribution, which is due in 30 days. So it will be also part of their expenditure. So get the total of that, and then so that we get the net assets. So the net asset will be, we take this minus this, so which will be this minus this, so that we get that. So this is the one which we will get to the statement of changes in net net assets. So you can see this one will take you around 3 minutes. You have done with your 5 marks. So a FAR is very easy, so long as you know the format. So the key is the format. Once you understand the format, then you come to the adjustment. So at our class, we still enrolling the student. We only charge 4,800 for the entire semester. You also get videos after class and also past papers. And we do the revision after the last minute, after we have done with the syllabus. So for the retirement benefit scheme for the net assets, we will have to start with the PPE, property, plant, and equipment. I hope I will done with this in 5 minutes. Property, plant, and equipment, which is that we also have the government security. The government security. We also have the investment. So the first investment is this. And then the second investment is 19. You can combine the two, but it is good to list separate. That is unquoted. And then what else? We have that makes the end of the non-current assets. Then we go to the current assets. So we go, this is non-current assets. Then you go to the current assets. So for current assets, I can also see two, the cash and the demand deposits. Cash and the demand deposits of this. We have another one, which is changes in the market value of the investment. This one, actually, it's look like the non-current asset. It is not the fixed one. So we can classify it as a, we can classify as non-current assets, current asset, I mean. And then we will have the equities. So for the equity, in this case, we take the accumulated fund in the pension plan as part of the equity. So the accumulated fund, which is this, and then also we will take the net asset, the one we got it here, which is this one. So we will also bring it here. And then I've not seen any other non-current liabilities. So we go direct to the CL, that is the current liabilities. So for current liabilities, we have unpaid benefits. So they have not paid the benefit maybe for the previous financial period. So it is a liability. That's why it is on the credit side of their trial balance. So we will put here as a current liability. It's a current liability. And then we have accrued expenses. Accrued expenses also is a liability. It is relating to the other period, but they have not been paid. That's why we have not included here. It is not relating to the current period. It is relating to the previous financial period. So we will total now the total non-current assets, and then we total the current assets. We'll also need to have the total here, which will be this plus this, to give us that one. So that one is our total assets and total assets. And then if we take this also, give that, and then take the total liability, and then take the equity plus the liability, which will give us the same value with this. And that was tested last sitting, 10 marks, which we only took 5 minutes to answer that question. So financial reporting is very easy, only if you get the format. So if you get the format, remember we mark the posting. We don't mark the correct the correct figure. So for that, maybe if you didn't get this final figure correct, then you will get 4 marks. If you didn't balance the question, you will get your 4 marks. So you end up getting 8 marks, even without getting the balancing figure. So when it comes to the financial reporting, we don't fight for the balancing figure. as a student, we fight for the posting. So make sure that you know the format. After knowing the format is to know where to post, because there's a lot of free entries. There's a lot of free entries. I've seen a lot of people complaining the last sitting paper was difficult, but for me, I've seen it, I've gone through it. It was an easy paper, because only you need to read more and do a lot of questions so that it helps you to memorize this format. So thank you so much. I think that and we will end our session today from that. So our class, we are still forming the timetable. We'll have the early morning and also the evening session. Early morning from 6 a.m. to 8 a.m., evening from 8 p.m. to 10 p.m. And only we charge 4,800 for a session. And also if you join our session, you get free training on the practical accounting, advanced Excel. We also train on that. So thank you so much and have a good night. So if you have any query and any further